How are you, students? My name is Mr. J.M. Kimani, your lecturer in Management Accounting. Welcome to Lesson 3 of the topic Budgeting and Budgetary Controls. Now, topic 3, this one features the cash budget as one of the functional budgets. Remember, the Lesson 2, we covered the material usage, material purchases, sales budget, as well as the production budget. So another functional budget is the cash budget. So one of the question reads that, and this question is May 2016, question 4. May 2016, question 4. The question reads that Mark Limited operates a budgetary control system. The following is the company's income forecast for the 4 months period ending 31st of August 2016. We have the month of May, June, July, and August. The amounts are shillings in thousands. Sales 45,000, 55,000, 75,000, and 50,000 respectively. Cost of sales 21,000, 28,000, 42,000, and 22,000 respectively. Gross margin is 24,000, 27,000, 33,000, and 28,000 respectively. Selling and administration expenses, we have selling expenses which is 7,000, 8,400, 11,200, 7,300 respectively. Administration expenses 5,500, 5,900, 6,900, and 5,200. Total selling and administration expenses 12,500, 14,300, 18,100, and 12,500. The net operating income is 11,500, 12,700, 14,900, 15,500. Then additional information. Number 1 is that administration expenses include depreciation of shillings 1.8 million each month. Number 2, 20% of the sales are on cash basis. Number 3, credit sales are collected over a 3-month period with 20% collected in the month of sale, 65% in the month following the month of sale, and 15% in the second month following sale. The number 4, sales for the month of March 2016 and April 2016 total to shillings 27 million and shillings 33 million respectively. Number 5, inventory purchases are paid for within 15 days. Therefore, 50% of a month's inventory purchase are paid for in the month of purchase, and the remaining 50% paid for in the following month. Accounts payable for inventory purchases as at 30th of April 2016 totaled to shillings 11.1 million. Number 6, the company maintains its inventory. The company maintains its ending inventory levels at 25% of the cost of the merchandise to be sold in the following month. The merchandise inventory as at 30th of April 2016 amounted to shillings 5,250,000. Then number 7, land costing shillings 4.3 million will be purchased in month of May 2016. Then number 8, dividends of shillings 1.3 million will be declared and paid in the month of July 2016. And number 9, the cash balance on 30th of April 2016 amounted to shillings 8.4 million, and the company must maintain a cash balance of at least this amount at the end of each month. In case of any deficit, a bank overdraft is obtained. Required. For the 3 months ending that 1st of July 2016, prepare number A, debtors collection schedule, B, creditors payment schedule, and C, cash budget. End of the question. Now, this question requires us to work on the sales and the collection. Then we work on the purchases and the payments. Then from there we can do the cash budget. We have been given about the months of May, June, July, and August, though we have been asked the months ending July, which of course means May, June, and July. So for us to get the debtors collection schedule, we are going to present it this way. So this is number A, debtors collection schedule. So we'll have the details. We'll have the May, June, July, and August. May, June, July, and August. And at the same time, just looking at the months provided, we are able to see May up to August, and that is okay. Though in the information we will be given even up to September. Then we are going to start with the sales, so that we can see the sales in these months. We just need to copy the sales provided in the month of May. This is 45,000. The figures are in thousands. 55,000. July is 75,000, while August is 50,000. So this one we just need to double line it. That at least we can say that we do have the sales, from which now we're going to look at the policy. Now the policy of the company as provided in the information. This is information number 2. 20% of the sales are on cash basis. So when you have here, this is a cash sales, 20%. So as we do the computation, we'll have it this way, that you have a 0.2 times 45,000, which is 9,000, is to be paid the same month. 0.2 times 55,000, this is 11,000 to be paid the same month. Then you have 0.2 times 75,000, this is 15,000 to be paid the same month. 0.2 times 50,000, this is 10,000 to be paid the same month. That's the collection to be done. Then we have credit. This is credit sales, which is 80%, of course, 80% of those amounts. Then we have been told in the information number 3, credit sales are collected over a 3-month period, with 20% collected in the month of sale, 65% in the month following the month of sale, and 15% in the second month. Now you're looking at these percentages, 65 plus 20, that is already 85, plus 15 is 100. So that means we are addressing this 80%, how is to be collected. So when you're told that we have the 20%, this is of 80%, then 65%, this is of 80%, and this is actually the 15% of 80%. This is just a way of doing things. Remember, this is 100%, but we can be able to relate to this 80, which is going to be 0.2 times 80. This is 16%. 0.65 of 80, this is 52%. And 0.15 of 80, this is 12%. Now, one thing to note, this is just working with the percentages. If you look at this percent this time, comparing the 20, 25, 65 and 15, which is 100%, and when you know very well that your credit sales is 80%. So if you now add this, I've derived they will give you 80%. 80%. So 16 plus 52 plus 12 is 16 plus 52 plus 12. This is giving 80%. So we can now correctly deal with this 45% in terms of 80. So that now we have 20% and 80 giving us what? 100%. So let's see. We are told that the bit of 20% is to be collected the same month. The bit of 20% in the same month. So it will be 0.16 times 45,000. This is 7,200. Remember, it's just like you take, first of all, 80% of 45. So it is 0.8 times 45. That's the first bit. So you get like 36,000. That is the credit sales. Then it is this one you're told 20%. 20% of this for sure, it will be 7,200. And this is what you are being told that is going to be paid the same month. And that's what I'm getting here. So I repeat to emphasize that it's just like taking, first of all, 80% of the total sales, which is 45. 80% is at 6,000. Then 20% of this at 6 is 7,200. So I can work out on the percentages. I say 20% of 80%, which is 16%. Now I'll be directing my 16% on the same total figures, just like I did with the cash sales. I find it easier that way, but still you can work out on the credit sales. Now, the next one is 0.16 times the 55,000 total sales. This is giving us 8,800 paid or collected in the same month. Then 0.16 times the 75,000 total sales. This is of the month of July. This is 12,000 collected on this in the same month. Then 0.16 times 0.16 times the 50,000 for the month of August. This is 8,000 collected in the same month. Then we are told that the bit of the 52%, which is now these 65%, we have been told that this is to be collected the following month. So the following month after sale. So therefore, we are going to expect the month of May. So this one, we just have a dash. So that now we can do 0.52 times the 45,000 of the month of May to be collected in the month of June, which is here. This is 23,400. Then 0.52 times the sales of June, which is 55,000. This to be collected 28,600 in the month of July. Then 0.52 times 75,000 in the month of July to be collected in the month of August. This is 39,000. So meaning by the end of August, we'll not have collected the 52% of this 50,000. Then this 15% you have been told is to be collected 2 months later. 2 months later, meaning for the month of May, we shall not collect in May, we shall not collect in June. We are going to collect in the month of July. So therefore, the 0.12 of 45,000 in the month of May sales will be collected in July, 5,400. The 0.12 times the sales of June, which 55,000, which is 6,600 to be collected 2 months after, which is 6,600. Meaning by the end of August, we will not have collected the 12% of July and August. That's how it is. So we are through with the sales of these months that are already recorded in this debtors collection schedule. But we also need to understand that the policy never started only in the month of May. We have been having this policy even in the previous months. Meaning there is a way that in these months of May and June, we may be receiving the collection from sales made prior, which is in the month of April, the month of March. And that's why we have been given the sales in this information number 4. That sales for the month of March 2016 and April totaled to 27 million and 33 million respectively. So if the month of March and then April, if the month of March the sales are actually 27 million and this one is 33 million and this is actually sales, so we need to have the same understanding that we have the balance brought forward. This is now from the sales made previously or prior to this period of May, so therefore backward. So therefore, the balance shall be, there is this now, the 52% and the 12%. So we're going to have for the March, already 16% was collected in the same month of March. 52% was collected in the month of April, which is not in this. Then now 12% is being collected in this month, which is now 2 months later. So we have 12%. So it is 12% of this 27. So 0.12 times 27,000. So 0.12 times 27,000. This is to be collected here, 3240. Then we have the April. Now April, 16% was collected in the same month of April. Then 52% is to be collected this month of May. So you have 52% to be collected in the month of May. So it is 0.52 of these 33,000, which is 17,160, while we have 12% still of April. That 12% is to be paid 2 months after, which not in April, not in May. So it is going to be in June. So we're going to have it here in the month of June. So 0.12 times 33,000. This is 3,960 dash. And that's all. So now we can say that we have collected every coin that was with the debtors for the month of March and the month of April. And therefore together, this is now the collection. So collection shall be, so we are going to start from up here, the cash sales, and then now the credit sales. So we'll have the collection of 9,000 plus 7,200 plus 3,240 plus 17,160. So this is 36,600. Then June is 11,000 plus 8,800 plus 23,400 plus 36, that's 960. That's 960. This is 47,160. Then we have July is 15,000, 12,000 plus 28,600, 28,600 plus 5,400, which is 61,000. And lastly, in August, we have 10,000 plus 8,000 plus 39,000 plus 6,600. This is 63,600. So that is now the collection, and I hope everything is clear concerning how the collection is done. And that's why you call it as debtors collection schedule. So how we are collecting money from the debtors. And that is it as far as the Part A debtors collection schedule is concerned. Then you go to Part B. Part B is actually creditors. Creditors payment schedule. So we have the details. We have May, June, July, and we have August. So where we'll have purchases first. But again, let's see whether you have purchases, because we may be having something that is not provided. Yeah, exactly. Look at, we have the cost of sales but not purchases. So how do we determine the purchases when you have been given cost of sales? Now, this reminds you of what we call the trading account, where you have the opening stock. We have the purchases here. We have the sales. And we do have what we call the closing stock. Now, this will give us the profit, yes. But again, noting that this closing stock can be brought here. We say closing stock, but again, it's going to be negative. So that we can get now our cost of sales. Meaning what? That if, for example, this is a question mark, we don't have purchases, but at least we have cost of sales. As much as the formula was opening stock plus purchases minus closing stock equals to cost of sales, we can make the purchases the subjects, and this time it will be purchases equals to, we have the cost of sales, then you transfer the opening stock as minus opening stock, and then we add the closing stock as we transfer them to the other side. So we are going to use this simple formula for us to understand what the purchases is. But in case you don't have this, you don't have let me say, the privilege of stocks, and even the cost of sales, you don't have the privilege. But you have the sales because, like in this question, you have the sales. Assume you have the sales, you don't have the cost of sales, but you have the profit margin. You can use the profit margin and deduct it from the sales to get the cost of sales. Then now again, you work out this way. Sometimes you may not be having the cost of sales. You may be having the opening stock and the closing stock, but don't have the cost of sales. But if you have sales, you just go get the margin involved, then subtract it from the sales, get the cost of sales, then work out this way. But in our case, because we have been given the cost of sales, we have that opportunity. Now, we are going to have it this way. This is a cost of sales. We have opening stock, and you have the closing stock. The cost of sales has been given there as 21,000 for the month of May, 28,000 for the month of June, 42,000 for the month of July, and 22,000 for the month of August. Then we have the opening stock. The opening stock has been given in the information number 5 and 6. Looking at information number 5, inventory purchases are paid. So that one is not giving us actually the stock, but note number 6 is telling us that the company maintains its ending inventory levels at 25% of the cost of the merchandise to be sold in the following month. Then the merchandise inventory as at 30th of April, which now is the opening of May, is given there as 5,525,000. So this is 5,250. We have been given that figure as closing stock of April, which become the opening of May. So we go to our format, our policy. Our policy is to maintain 25% of merchandise of the following month. So 25% of the month of June, which is 28,000. 25% of the cost of sales of July, 25% of cost of sales of the month of August, so 22,000, and 25% of the month of September, which if we don't have, then that means we can't be able to work out the cash budget or either the creditors payment schedule for the month of month of August, only up to the month of July, which is okay. So let's leave it that way. So let's have this 25%. This shall mean 0.25 times 42,000 is 10,500. 0.25 times 42,000. This is where am I? Sorry, I should have done 0.25 0.25 times 28,000, we get an amount of 7,000. 0.25 times 42,000, this is 10,500. 0.25 times 22,000, this is 5,500. That's all. Now that policy, remember, it has not just started in May. It started even in the month of April and backwards. So even in April, the closing stock must have been 25% of the cost of sales of May. And no wonder, if you do 0.25 of the cost of sales of 21,000, it is coming to 5,250, the figure that you have been given already in the question. So that is very true. So now with this, we can get our purchases. We have here our purchases. And the purchases we are having will be, remember, this is not a current purchase. And also remember that the closing of one month is the opening. So here we have 7,000 as opening. We have 10,500 as opening. And you have 5,500 as opening. And that means they were not the current month's purchases. This opening were not the current month's purchases. So as we work out, we subtract them and we add the closing stock. So we are going to have the May, we have 21,000 minus 5,250 plus 7,000. This is 22,750. We have 28,000 minus 7,000 plus 10,500. 10,500. So this is giving us 31,500. And lastly, we have 42,000 minus 10,500 plus 5,500. This is 37,000. So we can only stop at that because we don't have information concerning the April. But should we have, let's see. We have the information. Which information? We have the information number 5 about the inventory purchase, which we are only given the opening stock, opening creditors for April or for May. So that is all. So we can just work on that. So let's see. We are told that these purchases shall be paid when? We have been told in the information number 5 that inventory purchases are paid for within 15 days. Therefore, 50% of the month's inventory purchase are paid for in the month of purchase, and the remaining 50% is paid the following month. And then you have the opening balance of the purchases, which is not purchase, but the creditors, 11,100. So you can have this way now. You can have this done. So we bring now creditors. So we have, first of all, the balance brought forward. This is for maybe April. We have 11,100 as we have been given. This balance will be paid in the month of May. Then now we come to this can be cash, 50%, and we can have creditors. No, credit, 50%. Such that cash, I'm calling it cash because we are paying the same month, but not necessarily cash, but it's just to language to understand that 50% of this I'll be putting here, 50% I put the following month. So I'll be having, like now here I have dash, but 50%, 0.5 of 22,750. These will be received in the same month. This is 11,375, and the other balance to be received here, 11,375. You see, concurrently, I record in the cash and the credit, which is half of this 22,750. 0.5 times 31,500. This is 15,750 I receive in the same month, and the other 15,750 I receive in the following month. Then when it comes to the month of July, 0.5 times 37,000. This is 18,500, and the balance will be received 18,500. But remember, we're only interested with the month of May, June, and July. So therefore, I require these 3 months. I need to have that payment. So here, I need to add, I'll have 11,100 plus 11,375. This is 22,475. Then we have, this is 15,750 plus 11,375. This is 27,125. 18,500 plus 15,750. This is 34,250. So this is the payments now. So we are going to receive, or we are going to pay the suppliers in that manner. And that's all about part A and part B. Then part C is now the cash budget that we were asked. So you can have here the cash budget. This is cash budget, shillings in thousands. We do have the information given in this manner. So we do have the details. We have May, June, and July. Details, May, June, and July. So we just need to bring in the cash inflow and outflow. So we normally start with the opening balance, so balance brought forward. Then we come to the receipts, and we underline the receipts. Now, the opening balance, as we have been given in the question, which I believe was the last statement, the last information, number 9. The cash balance on 30th of April amounted to 8.4 million. That means is the opening balance, 8,400, the figures are in thousands. Then the receipts, we are going to have the from debtors. This is from debtors. We expect they pay us. In the month of May, we receive 36,600. In the month of June, we receive 47,160. In the month of July, we receive 61,000. So we are working on the 3 months only. So we ignore the August. And then we come to, do you have any other receipts? So the receipt, if you look at the information, number 1 is about expenditure. Number 2, we have worked on it. Number 3, we have worked on it. Number 4, we have done. Number 5 is about payment. Number 6 is also payment. And number 7 is cost. Number is payment. Number 8 is payment. And number 9 is cash balances. So there's no other receipt. So we're just going to indicate a line there and total receipts. Then you can have the payments. Payments, the first one we start to suppliers. To suppliers of raw materials, which we have here the payment, 22,475, 27,125, 34,250. That is the payment we have. Then we look for other payments. Looking at administration expenses. So we have here admin expenses. We have been told in information number 1, administration expenses include depreciation of 1,800, 1.8 million. Now remember that this shows that depreciation does not involve cash outflow or inflow. So because of that, we are going to exempt it. As much as we are given the administration expenses of 5,500,000, we are going to avoid, or we are going to subtract the 1,800. So should we take the 55, we subtract 1,800, we remain with administration of 3,700. If we take the administration of 5,900, we subtract 1,800, this is going to give us 41. And should we take the administration of 6,900, we subtract 1,800, this is going to give us 51. So that is all about the administration. And remember, I have deducted the depreciation because it does not involve any cash outflow. And number 2, unless we are told otherwise, we expect that admin expenses are to be paid the same month. That's why I have recorded for the same month. Then you also have the selling. Selling expenses, we're not told that we are to pay this at a later date. So we are going to pay the same period. So therefore, the selling expenses are 7,000 for the month of May, 8,400 for the month of June, 11,200 for the month of July. That's what we have. I'm through with those payments as they appear in my question. Then I go to the information. On the information we are having, I'm through with admin. I'm through with number 2 is sales. Number 3 is also sales. I'm through with it. Number 4 is sales. I'm through with it. Number 5 is about payment. I'm through. Number 6 is about inventory. I am through with that. Number 7 is land costing. So we have land. Land costing 4.3 million will be purchased in May. In May, we purchased land costing 4,300,000. I have recorded in the month of May, imagining that the word will be purchased means we'll make the payment in the same month. Unless there is some indication that we shall not make payment. But when you're just given that word that we are going to purchase and the question is silent, then the statement is silent, that means the indication is that we are going to make payment in the same month. But when it comes to number 8 about dividends, we have dividends here. These dividends, they are going to be declared and paid in July. So dividends of 1.3 will be paid in July, 1,300,000 in July, but not in June. That's about the dividends, and I am through with that note number 8. There's nothing else that I have to pay. And then I am told that number 9, the cash balance is 8,400, and the company must maintain a cash balance of at least this amount at the end of each month. And in case of a deficit, we can take an overdraft. That means what? We need to have here a bank overdraft, OD. So because we'll be paying. So that you can have here now the payment. Then you can have the bank. This is bank. Overdraft. This is obtained. And this is paid. Obtained. Then you can have now our cash balance. So this is a balance. Correct down. So now, as we begin, we are certain we had not taken any overdraft before. So you're not making any payment here. So we can now add to get the payments. The payments for this month, we have 475 plus 3,700 plus 7,000 plus 4,300. This is 37,475. While the receipts of that month, we have 8,400 plus 36,600. This is 45,000. Now we are supposed to have a cash balance not less than 8,400,000. So if we subtract 45, we subtract 37. So minus 37,475. The balance I'm getting is only 7,525. So I have to take an overdraft, which if I balance with the 8,400, I must take an overdraft. So if I take 8,400 minus this 7,525, I must take an overdraft of 875. Now that means as we are going to obtain a bank overdraft of 875, so that means if you take 45,000 positive and 875 positive, you shall get 45,875. Now when you offset that 7,475, the balance will be 8 million or 8,400. That's what it meant. When we come to this month of June, we shall begin with 8,400. Then we add, so this 8,400, we add the receipt of 47,160. This is going to be 55,560. Then when it comes to payment, of course, an overdraft is to be paid we paid immediately. And therefore, we shall pay it here, 875. We have not been told about any interest. Otherwise, if you are given interest, then you would pay it here plus interest. But now it is silent, so we ignore the interest part. So when it comes to the payments, we do have 27,125 plus 4,100 plus 8,400 plus 875. This payment is 40,500. If we offset from the income or the receipt of 55,560, we subtract this 4,500, we get 15,000, which is already more than 8. So we don't need to obtain any overdraft there. So we have 15,060, which we are going to transfer here, 15,060. That when you add to this payment of this receipt of 61,000, this is 76,060. When you determine this payment and there is no overdraft to pay, 34,250 plus 5,100 plus 11,200 plus 1,300. This is giving us 51,850. That if you offset from 76,060, we shall get a balance of 24,210. No overdraft to obtain, and that's dash. So that tells you that we have been able to project the cash status we'll be having in each of the months. So we should be closing with 8.4 million. We should be closing with 15 million. We should be closing with 24 million at the end of the month of July. That is our projection. which is actually driven by these payments and these receipts. That's what we call the debtors collection schedule, the creditors payment schedule, and the cash budget. That is it. And that brings us to the end of that question and the end of lesson 3. In lesson 4, we still continue with cash budget before we go to the master budget. So for now, that is it. Let's meet in the coming lesson. Thank you, everyone.